Good afternoon. I'd like to welcome you to the Korea Economic Institute. My name is Troy Stangeron, and I'm the Senior Director for Congressional Affairs and Trade here at KEI. We're really pleased today to have both Randall Jones from the OECD and Tehran Feyzullah from the IMF with us here today. As you know, this is, I think, the third time in the last 6 years that we've been able to host an event on the OECD's economic review of the South Korean economy. And we've been fortunate that Randall's been able to come in from Paris. It's probably a burden on him to leave Paris to come to Washington, but we're happy he's able to come. This is the first OECD review since the Moon Jae-in government has come into office. And so I think, we'll have a lot of interesting things to discuss. One, where the state of the South Korean economy is, but also how, for example, the Moon administration income-led growth strategy impacts the future of the Korean economy. And so with that, you all have their bios, but I'm just going to briefly say Randall is currently the head of the Korea-Japan desk at the OECD Economics Department. During his time at the OECD, he has written extensively on the economics of both Japan and Korea, and he's also written on broader publications on economic and financial restructuring in Asia. Prior to joining the OECD, he worked at the U.S. Department of State, the Japan Economic Institute, and the Council of Economic Advisors. Tehran is currently the mission chief for Korea at the IMF and a division chief in the Asia and Pacific Department. He was also previously the advisor to the Deputy Managing Director, Tao Zhang, covering more than 90 countries. And prior to that position, he was the Deputy representative of the IMF in Beijing, and he also worked in a number of economies in Europe and Asia, including South Korea, as an economist and mission chief. With that, I will turn it over to Randall.
Well, I'm very happy to be back at KEI and want to thank Troy for organizing this again. I'm very happy to have Tarhan from the IMF, and we've talked a lot in the past, and it's very kind of him to come over and participate today. So, voila. So we have 4 topics in this survey. I should say this is my 16th survey of Korea. Korea in 1992, Kim Young-sam said he wanted to join OECD. And so I started working way back then on the first survey, which was published in 94. And this is the 16th one that I've done. I should maybe say a word about how we do the surveys. We have 36 countries now at OECD. This survey started last July when I went to Korea for about a little more than a week and visited Sejong, where the government is, and the research institutes. Then I went to Seoul and visited academics, the labor unions, the employer associations. And then I had about 6 months to write the survey. I sent a rough draft to the government in December, and then went back to the Korea in January and talked to the DPM and the ministries about what they thought. And then we had the meeting on March 14th. And then all the countries have to agree. So all 36 OECD countries have to sign off on the final version. Of course, the one that really cares the most is Korea. And so I spent a few days in a room with the people from the ministries, 25 Korean officials and myself. And we talk about line by line, going through the survey. And then we have the committee approve it, and then it got published in mid-June. And so that's it's a long process. It starts with my views, and then we have to make sure the government can agree to it, which means sometimes should becomes perhaps, should consider instead of just do, and we have to make it more diplomatic. So in this survey, we, as always, talked about the macro situation, macro policies, and outlook, and then we talked about these well-being challenges. The 2 special chapters chosen with the government were on the Chaebol, the large business groups, and also on the SMEs. So I'll try to go through not too quickly, but you can also get this either on your website or our website as well if you want a copy or if you want the more information. So looking at Korea's performance, as you all know, Korea was an extremely poor country. They got up to about 67% of the U.S. per capita income. We've seen a sharp slowdown in growth from 6.4% during the 1990s. Now it's a little bit below 3%. So this is partly to be expected as a country gets closer to the most advanced economies. There's a natural slowing down. but to be honest, it's happened more rapidly than I would have expected. And so I think there's room for policies to try to sustain Korea's convergence to the top countries. This is our short-term forecast that we made published in May, and we kept it in the survey. So essentially, we see growth staying around 3%, which is the potential growth rate for Korea. You can see that private consumption is a bit lower. Ever since 2006, private consumption has lagged GDP growth, and that reflects partly high household debt. Government consumption has taken off. We have 6% in 2018 with a supplementary budget and the more stimulative policy of the President Moon government. Business investment slowed sharply this year, but we see it bouncing back. And the key thing driving growth is exports coming back in 2018, driven by semiconductors. And Korea accounts for about 60% of semiconductor market, so this is really important for the Korean export sector. But looking at exports as well, we've seen the sharp slowdown from 13% growth in the 1990s, and since 2011, it's been about 2.6%. So Korea is actually lagging the OECD area in export growth, and that's a sharp change. We have a measure we use called export performance, which basically measures Korea's export growth minus import growth in their top 53 countries. So Korea's performance in the red was going up very sharply to about 2011, and since then it's been tailing down. While Japan, under Abenomics, has seen a bit of a rebound, and China continues to go up, though, at a slower pace. So this export slowdown is creating fundamental concerns that the traditional growth model is no longer working. And so President Moon talks about the paradigm shift, moving away from a Chaebol, export-led, manufacturing-led economy towards one led by SMEs, entrepreneurship, and the service sector. So it's very ambitious, not something we can do in 5 years, but it's very important to try to start moving the economy in that direction. In terms of inflation, we got above 2% earlier at the end of 2017 due to fresh food prices, but now we're down to about 1.5%, I think in May so we're below the 2% target. So inflation is firmly under control. We have housing prices going up relatively gradually, Korea in the red. Basically in real terms, we've seen very little change. Of course, in Korea, everyone's concerned about relative housing prices, what's happening in Gangnam versus the rest of the country. But that's a shift in relative prices, and we don't really worry about Gangnam. We worry about the overall. You can see the U.S., the Euro area, the OECD as a whole have quite strong increases in housing prices. And then on the key question on household debt, we had household bank lending to the households going up 12% to 11% end of 2016, and now it's down to 7% because the government has introduced a large range of macroprudential policies covering loan to value and debt to interest regulations on mortgages. So the housing market, the blue line, you can see construction orders have gone from 70% down to about 2%. So the construction sector is going through a sharp adjustment, partly as a goal of restraining the growth of household debt. So when we look at monetary policy, our advice is to be cautious and very gradually unwind the monetary stimulus that started going back in 2012. So from 2012 to November 2017, interest rates dropped dramatically to an all-time low, 1.25%. And then in November, we had the first hike up to 1.5%. When you look at the committee, the hawks say, well, the U.S. is raising interest rates. We have to raise our interest rates. Then the doves will say, well, employment is falling because of minimum wage and inflation is under control. So you can see a sharp split in the committee. But we expect maybe 2 hikes by the end of next year, a very gradual withdrawal. Let me turn to fiscal policy. There, Korea stands out for having a very sound fiscal policy. Traditionally, they've run surpluses. It's averaged about 1.8% since 2011 on a general government basis, which they don't use, of course, in Korea. But it's been solidly in a surplus. And that reflects the fact that they're aging very rapidly, and they're trying to pre-fund the pension liabilities that they're going to face over the next 50 years. So on a general government basis, the pension fund has a surplus of more than 3% of GDP, and that puts them into surplus overall. During 97, when we had the crisis, the fund and we got involved as well, and we tried to say spend more money, and the government was like, how? And then when we told them how, they said no. So they're very cautious about spending money, and as a result, they have very low debt. Gross debt is about 45% of GDP, and they have a net creditor position, meaning their assets are larger than liabilities, partly because the National Pension Fund is accumulating these huge reserves. And this is one area where perhaps we might have a different emphasis in the fund. We favor continued caution in fiscal policy. Partly it's personal. I work on Japan. In 91, when Japan really started going into aging, the situation was under control. Budget surplus, debt of 60% of GDP, and now they're at 235% of GDP debt and 24 straight years of deficit. And so it makes us cautious, and the reluctance of the Koreans to raise tax revenue makes us cautious. The other thing is they're growing at potential. So usually when a country is growing at potential, we don't get too much involved in asking for more fiscal policy. The other reason is we look at why spending is low and why debt is low. It's because social spending in Korea is only 10% of GDP. The OECD average is the black line. That's 22% of GDP. You see Japan has come up sharply because of aging. We have Denmark, the kind of Scandinavian approach, closer to 30. The government estimates that under the current situation, the current framework, that if aging alone would raise social spending to 26% of GDP by 2060. So if they don't do anything, just let demographics take their path, the spending on social policies would rise up somewhere close to Denmark. And so we're cautious about adding more social programs, given that they already have long-term care insurance, universal health insurance, and a full range of social policy. The other factor is that makes this difficult is the aging. And so social spending will rise because Korea today is the fourth youngest population, and by 2060 or 2050, they will be the second highest after Japan. So that implies that the speed of aging will be very unprecedented. Japan took a long time to go from young population to elderly, but Korea is doing it over 50 years or so. And so that is a sharp shock to the economy. The birth rate now is 1.05. And despite all the talk about trying to raise the birth rate, it continues to just flounder. Japan, on the other hand, was 1.25, and they're up to 1.46. So Japan hit bottom about 2010, and now they're gradually going up. But Korea, we haven't seen any turnaround in the demographic situation. And in terms of social spending, it's already going up very fast, about 11% adjusted for inflation from a low base. And so we expect it to continue rising due to the aging population. And finally, let me just say a word about North Korea. North Korea, of course, is, we call it a potential contingent liability, is one way we put it. You can see in this chart, the first line, the North Korean economy, the second line, gross national income, is only about 5% on a per capita basis of the South. So this income gap, 20 to 1, 21 to 1, is huge. And if it happens like in Germany people estimate that between 1991 and 2003, the West made transfers equivalent to 4% of GDP to the East. So you imagine the case of Korea, where the gap isn't 3 to 1, it's 22 to 1. The transfers could be extremely large and put a huge burden on South Korea. If you look at the numbers for 2016 growth, 2017 growth came out over the weekend, and actually the North Korean economy shrunk by 3.5%, if I remember the number. And this year will be worse because trade with China is down 85% in the first 5 months of 2018. So North Korea is going through a phase of a shrinking economy again because of sanctions, basically. Exports are down 15% last year, and this year they could be down 80, 90%. Trade with South Korea has disappeared. It's less than $1 million in 2017. So these ties that were growing with Kaesong and all these projects are now stalled or broken, and North Korea is going through, again, a very difficult phase. So knowing that South Korea bears this burden, that's another reason why we favor trying to maintain a strong net asset position in the government. Lee Myung-bak proposed a VAT increase to pre-fund unification. And of course, that made the North very angry because they didn't see any need for it. And the South doesn't like taxes, so they voted against it. Let me just finish by talking about the minimum wage issue, because this is really the key issue that we talked about a year ago, and we talk about it constantly. So if you look at this chart, Korea's minimum wage has risen rapidly from 29% of the minimum back in 2000 up to about half. So it's in line with the OECD average. And if it gets too high, we worry that low-income, low-educated people won't get jobs, and that SMEs will go bankrupt. And so we say around 50%, that should bring some social cohesion for poor, low-income people and avoid distorting the labor market. So President Moon made a promise that he would raise the minimum wage to 10,000 Korean won by 2020. And that implies a 54% increase over 3 years. And so that would be unprecedented. All the studies we see talk about a 5% increase, has a small impact on employment. Talking about a 54% increase is a bit unprecedented. As part of the income-led growth strategy, one part is raising public employment by 34% over 5 years. And my position was, well, public employment is 8% of total employment in Korea. The OECD average is 22%, so Korea has a very small government. So it's natural over time that it rise. But we didn't understand the logic for 34%. Why not 30%? What was the logic? And so we think it's a bit dangerous arbitrarily. So we want to increase it by 815,000 workers because those are lifetime jobs with a civil service pension that's not funded. So anyway, they raised it. In the first 5 months or 6 months of the year, we've seen a fairly sharp change. In the past, employment grew about 1.2% per year, about 350,000 jobs. But in May, the increase was only 72,000 jobs year on year, a 0.3% increase. In April, it was 0.4%. So there are signs that we're having a severe impact from the 16.4% hike that took place in 2018. If you look at how it's divided, it's not just the minimum wage. Manufacturing is losing jobs, and that's shipbuilding and other troubled industries. We have construction employment is basically stalled because I showed the construction orders dropping towards zero. But a lot of it is retail wholesale trade, a decline of 59,000 year on year in June. A whole hotel and restaurants down 43,000. And this is offset by public employment. Public service employment up by 86,000, and health and social welfare up by 138. So we have a big increase on the government side, offset by a large decrease on the private sector side, leading to a very sluggish wage growth. So in the survey, after hours and hours of argument and debate, our recommendation was look at what happened in 2018 before you raise it any further. And in Korea, the minimum wage is set by a tripartite commission, which has the unions, it has management, and it has the experts. 2018 increase was basically what President Moon wanted. 2019 increase came out over the weekend, and it was for a 10.9% hike. So the unions are very upset. They want a 15% so they can hit this 10,000 Korean won target. And President Moon officially apologized that he's not on track to hit this target. The management is very upset because they can't handle 16%. Now you add 11%. And so the Association of Micro Business said we're not going to obey it. We don't want to enforce this minimum wage. So let's see what the government, if they really enforce it, make them pay it. So no one's happy. And we'll see what happens going ahead. The thing that bothers me is for the 2018 hike, they introduced 76 new regulations or policies to offset the impact. So companies under 30 workers would get a subsidy to offset the impact. More than 30 workers could benefit from all these range of little benefits, freezing credit card payments, freezing rents for small shops, So when you take one big shock and then use 76 little distortions, you start moving to a very suboptimal equilibrium. And so already President Moon's saying, well, I know you don't like 11%, but we're going to do all these little things to try to offset it. And so for me, that's a very second best approach. And it's something that very much concerns me a lot. So we have the Chaebol moving overseas, and we have the domestic SMEs being hamstrung by these wage increases. So in the macro area, our recommendations were basically on monetary policy, very gradual withdrawal of accommodation, keep spending in line with the fiscal management plan. It's 5% average rate. Public spending is rising, and it's going to rise in the long run because of aging, and they already think that taxes need to increase in the long run. It's very hard to say in Korea. In the next line about the VAT, Korea doesn't like the VAT, and we say you should rely more on the VAT. That's how Denmark spends 26% of GDP. They can do it because the VAT is about 26% of GDP. So you can't get by with 10% if you want to be Denmark. And finally, on the minimum wage, we ask them to wait until they see what happens. So let me move now to well-being, the second topic. So Korea's income per capita, adjusting for price differences, is about 30% below the top half of OECD countries, so the top 17 OECD countries. So you have very low productivity, about 46% below the top half, offset by very long working hours and relatively high participation. Looking ahead, they're not going to be able to work their way out of low productivity. First of all, on July 1st, the limit on working time per week went from 68 down to 52 for companies with more than 300 workers. The small companies have a grace period, but that will change the way people work. Some of the unions are complaining that it means they work at home, they work in the car, they have to make up for it. But this will change the pattern of work in Korea. And President Moon himself, he was in 8 days of sick leave because he was working too hard. So he criticized himself for not following this work-life balance. So I think inevitably trying to move towards work-life balance raises productivity. If you go in a Korean office in the morning, people are still recovering from the late night of the office, and things don't really pick up until the afternoon. And so if you could shorten working hours, you could raise productivity automatically. You look at France, we went from 39 to 35, and the company said, we're not paying you anymore. You have to produce in 35 hours what you produced in 39 hours. And it worked. They managed to accelerate the pace of things to do that. So Korea needs to basically narrow this this productivity gap. In terms of employment, there's still a few areas where they can boost employment. The young people, we have very low employment rates for under 34, like the 19 to 34 age group. That reflects the mismatch problem where we train these kids for white-collar jobs in the government or the Chaebol, and the jobs aren't there. In 2012, 84% of high school graduates went to university. And Lee Myung-bak said this is overeducation. And he was right to some extent. Now it's down to 68%. But even still, we have a large stock of high school or university graduates who can't get the job they want. They want to be a regular worker, either for the government or for a Chaebol. So they stay at home, hoping someday they'll get that call. And so we have a very inefficient way of using youth. For women, we have the rate going up. It's getting closer to the OECD average. But the quality of jobs is not very good. In terms of gender equality in wages, Korea has a 37% gap. My other country, Japan, is up there as well. It was 40% in 2000, so it's not really changing. It's stuck at a very high level. In terms of management, women, this is central government. Women are only about I think 7% or 6% of senior management. And so this is discouraging because women have the highest rate of university graduation, but then they face a huge wage gap and not much opportunity to rise. The problem basically goes back to dualism, which is a thing I've been talking about for 20 years, but it's really a problem that is very hard to solve. Basically in Korea, you have people who are called non-regular. They're fixed-term contract or part-time or dispatched from a manpower agency, from a private job placement firm. And so these non-regular workers are about 1/3 of dependent employment of wage workers, and they get paid about 40% less per hour than the regular workers. If you look at the beginning, they come out with the same skills, but over time, the regular workers have lifetime employment if they want, they go up like this, and the regular workers just stagnate. So by the time they get to be 40 or 50, there's a very large wage gap, and that leads to inequality and problems. And so women, they start off maybe 9% below the male cohort, and then when they withdraw for children and come back as non-regular, the gap gets very large. And so as long as you have a dualistic market, it's going to be very hard to get women to participate in the labor market as they would like. And dualism causes inequality in general. This is both men and women. The share of workers earning less than two-thirds of median in Korea is almost a quarter. So Korea, when I was a student, Korea was the example of equitable growth. They kept relatively equal income distribution with rapid growth. Many countries, you have curves where distribution gets worse and then gets better. But Korea managed to maintain equality. But since 98, with labor market liberalization, we've had this problem in the labor market. The other issue that we've talked about a long time is poverty among the elderly. Relative poverty means you have an income less than 50% of the national median. So among the elderly in Korea, it's 47%. Most of the older people today expected to live with their children. When I was in Korea in the 70s, I didn't know any old people who lived on their own. They all lived with their children. And they used to say, you Americans are barbarians because you put your old people in old folks' homes. We in Korea, we live on this extended family. But it's dying away because people live in Seoul, and it's very hard to pack 3 generations into an apartment in Seoul. So it's down to about 38% of elderly live with their children, and most don't have access to public pensions, and all they have is a retirement allowance, which is maybe 3 or 4 years of income. So we keep arguing for more tax-financed social safety net pensions. They have a basic pension that's $200,000 won, so that's about $180, but they give it to 70% of the elderly. And so Korea, we always have this debate, universal welfare or targeted welfare. And Korea likes universal welfare. So 70% of the elderly, even those with above average income, get this $200 a month. But the people who are at the bottom, suffering in absolute poverty, only get $200 a month. So we say focus it, but for politicians, they don't want to do that because more people get it, more people vote. So it's a very political decision that we've argued about for years and years. And finally, another well-being that we worry about is green growth and pollution. So Korea has the highest air pollution in the OECD, is measured by this 2.5, this is particulate matter, and it's getting worse. Other countries have stabilized. It's partly China having this dust blown in from China. It's partly Korea's problem as well. So we focus on green growth and trying to make the environment better. Lee Myung-bak, of course, was the green growth president. That was the slogan for 5 years. Park Geun-hye took power, and green growth was erased from history. It was just kind of photoshopped out of existence. And so we're trying to push that to keep that going. So on well-being, we focus on issues of breaking down dualism, which basically means that employment protection for regular workers has to be relaxed. If you've ever talked to KCTU or FKTU, they are militant unions that do not want to lose their lifetime employment, basically. It's very hard to let them go. On the basic pension, we want to focus on the absolute poverty problem. And then the last two are about green growth. So let me move ahead to the third topic on the Chaebol. So I talked a lot about Chaebol in 97 when we had the crisis. And after that, we kind of stayed away from it. The government tried to push us away from that topic, and we didn't talk about too much. The Chaebol are what drove the growth. If you look at Korea's economic history, Hyundai, Samsung, LG drove the growth in 1970, even the late 60s, and they continue to get bigger. The top 30 now have 1,250 affiliates, so it's 40 for the top 30. For the top 4, we're up to 280, so they have 70. So on average, I think Samsung has about 75. These are very large conglomerates with lots of affiliates. The next slide shows how many fields of industry they're working in. And so we have about 60 industries per Chaebol. The Koreans call this octopus-like diversification. You have these pictures of the Chaebol with 75 arms strangling all the other companies in the economy. So they're very unpopular among people, except those who work for them, of course. But most people think the Chaebol are, in a sense, the enemy, or the people who are preventing the small companies from excelling. In terms of international comparison, there was a study of business groups across countries, In Korea, the top 30 groups account for about 55% of market cap. So it really, in international terms, these Chaebol are very dominant in Korea. And especially it's the top four. Samsung, LG, Hyundai Motor, and SK are the dominant four among the top 30. So when President Moon said, I want to put Chaebol reform at the forefront of my agenda, he's really thinking about Samsung, Hyundai Motor, LG, and SK, because it becomes a class of their own. So the reasons why I worry about Chaebol, I mean, some of these are theoretical and some are absolute, I guess. One is that the concentration of power tends to stifle opportunities for entrepreneurs and SMEs, and the Chaebol are always criticized for being unfair with the SMEs who supply them. So if there's an external shock, the SMEs are forced to cut their price and accept less favorable terms from the Chaebol that is putting together all these parts. The business groups tend to subsidize the weak affiliates, so that means the distribution of assets, of capital, is not optimal because they'll keep alive some company that's very weak that should disappear. The market power can cause monopoly, cartel behavior. The concentration of power in the owner groups, point 4, it leads them to manipulate money. So in their 75 companies, if one has a high internal family ownership, they try to channel the profits to that company so that the family can be enriched. And that means the shareholders of the other companies are basically expropriated. And so it's a problem of distribution. There's a risk of bankruptcy, chain bankruptcy. If one of the 75 goes bankrupt and they have ties to the other 74, that causes a chain reaction. And finally, the political power of Chaebol leads to corruption. And then, of course, in the Park Geun-hye government, we had another example where a Chaebol scandal caused the impeachment of President Park. It also leads to the Korea discount. So Korea's price-to-earnings ratio is about half of the world. Sometimes people say it's geopolitical risk because of North Korea, but it's, in my view, largely associated with the Chaebol. I mean, each of these companies is a legally independent company with their own CEO, their own board of directors, their own shareholders. So when the Chaebol family manages to distort things and take the money to their company, that is unfair to those people. Let me just say a word about how the Chaebol operate. In the past, the families, the green bar, they had a large share, but as the companies went public, the share of the family has fallen to only 3 or 4%. But they have the shareholding between the affiliates is how they keep control. So the inside ownership is actually going up rather than down over time. And these next two slides try to show this thing of tunneling, or how they take the money from some companies to others. So on the left-hand side, you have intergroup purchases. The company's share of intergroup trading as a percent of the total. And then the profit gap is the vertical. So the companies that sell a lot or purchase a lot tend to have high profitability. If they purchase more than 30% of their purchases are in the group, they have high profits. If they sell a lot, they have very low profits. So this is the tunneling that we talked about. And in terms of profitability, those who have high ownership by the family, they have high profitability. So it's the left-hand side. And those that have high ownership by other companies in the group, they have very weak profitability. So this leads to the unfairness charge. So the solution is corporate governance. In 1997, we went to Korea and said, you need to have American-style or British-style corporate governance. And we said you have to have 25% of your board of directors as outside directors. And in 2002, we said you have to have 50% for the large companies, those with more than $2 trillion of assets. And so what they did was they got their friends from high school, their friends from their hometown, and over a 3-year period, there was a study saying out of 9,000 items on the board's agenda, there were 0.4% negative votes. And those votes are never from somebody, a high school classmate. Those are the more independent ones. But basically, the system is not working because of the outside directors being basically very close to the family. So what should the government do? Well, they tried many, many things. And the KFTC is always busy thinking of new regulations, and the Chaebol are always one step ahead. So I asked the guy at KFTC, why can't you ever get regulations that really change things? And they said, well, the Chaebol are smarter than we are. So if we put a regulation in the morning, by the afternoon they figure out the loophole and they go around it. So you can look at all these things. I don't want to go in detail, but prohibition on cross-shareholding. So you can't have A and B holding shares in each other. But the Koreans do circular shareholding where A holds B, B holds C, and you go back to the beginning. Specialization policies. Kim Dae-jung had big deals, like Samsung focuses on this, Hyundai focuses on this. You swap all the businesses, and that was something we didn't like, and the companies said, no, we don't want to do it. Prohibition on pursuit of personal interest. That doesn't work because they're trading thousands of transactions and nobody's there to monitor it. So basically, what do we say? Finally, we talked about competition. In industries with more competition, there's less tunneling and less bad behavior. We need to improve corporate governance by making the criteria for outside directors stronger, reduce the role of management in nominating outside directors. If outside directors nominate outside directors, they tend to be less tied to the CEO. Not granting pardons to business leaders who break the law. That's a problem because somebody breaks the law, they go to jail for 2 years in theory, then they get out and go back to the same position. There's really no punishment for embezzlement or things that should disqualify them. Class action suits. What we have in the U.S. is the shareholders have lawyers who come to them who specialize in class action, and they say, we will try to get back what the company took away from you. In Korea, they don't have many. They've had 12 class action suits. The law firms also do business with the Chaebol, so they're not very excited about launching class action against the Chaebol companies. The National Pension Fund needs to be more active, which is a bit difficult. And we need an active market for corporate control. What I find is Koreans will say the Chaebol are terrible, but don't let any foreigners buy them because they're our national wealth. And so they have this kind of schizophrenia. And we would say, well, let there be a market for corporate control, and that will force better behavior. Let me just finish quickly on the last chapter, which is about SMEs. So this is a topic that the government really wants us to talk about. And then you have a new ministry, the Ministry of SMEs and Startups. And so all the policies for SMEs, which there's 1,300 policies to help SMEs. And the Ministry of Defense, the Ministry of Health, every ministry has a whole range of policies to help SMEs. So in theory, they're supposed to be centralized in this ministry that will try to bring some coherence and rationality to this area. So if you look at the productivity of SMEs, back in the 1980s, SME productivity per worker was about half of the large companies. Over time, it's fallen, and now it's about 32% in the manufacturing sector. So despite all this help, all this aid and assistance, the gap between the large companies and the SMEs just keeps getting bigger. If we look at the international comparison of this gap, the gap between SMEs and large firms. So Korea, this is for all sectors, not just manufacturing. It's about 31%. So that's the third largest. We have countries like Netherlands, where SMEs are 90% as productive as large firms. So there's no economic rationale for SMEs necessarily being inefficient. In other countries, they can be very efficient because they're the ones who can take new technology and innovate more quickly than the large companies. And the Koreans want to do that. They want to make the SMEs a driver of growth. The OECD, our slogan is inclusive growth. And so we're always talking about not just growth, but how it benefits across the income distribution. And when you look at countries where there's a large productivity gap is the vertical axis. And you can see countries like Korea where there's a big productivity gap between large firms, the productive firms, and the medium. You see a large income gap. So Korea's income inequality problem, we can't solve this by making more social welfare. We have to narrow the gap between the SMEs, where 78% of people work for SMEs, and 22% are agriculture or big companies or construction. If we want to narrow income gaps and have a more equal society, we have to address the underlying problem between SMEs and big companies. One of the problems in SMEs is low exit rate. So we have what we call zombie companies, companies that should not survive, are non-viable, but because the banks hesitate to put them out of business, they don't want to take non-performing loans on their balance sheet. And so we have a problem where the SMEs live when they should actually exit. So the exit rate in Korea is one of the lowest. Japan has the same problem. Their target is to raise it to 10% over the next 5 years. It's very hard to force SMEs out. The SME owner he got the loan using his parents' house or his house as collateral. And if he loses that, he's treated like a criminal. He hasn't paid his loan. He can't get a bank account. I mean, these people, it's very hard. So we need to change the whole exit policy. This slide shows that the share of capital in these zombie companies is large. 11% of the capital stock is basically sunk in these companies that are not viable. Finally, on entrepreneurship, if you talk to Korean young people, they say entrepreneurship sounds fun. You talk to their parents and say absolutely not. They don't want their kids to be entrepreneurs because it sounds like unemployment. They want their kids to work for Chaebol or the government. So they can't really, the youth don't really think they have much chance to go into being an entrepreneur. If you ask them, why don't you become an entrepreneur? Do you see good opportunities? The Korean youth, this is, I think, 1834. So they don't see opportunities. They think the Chaebol have it all covered. They don't think they've been trained for it. And they think they have too big a risk of failure, which would penalize them for life. So very few actually go into being entrepreneurs. And finally, the problem is really the service sector. So the SME sector overlaps with the service sector. About 90% of SME employment is in services. And so we have very little R&D in the service sector because they're SMEs. And then this chart is the one I always show, the MOSF, and mostly, which focuses on industry. Services in Korea are neglected. All the R&D goes to manufacturing. There's a myth that maybe started in Japan that manufacturing is real and services are ephemeral. They don't really exist. And so the idea is always more manufacturing. So if you look at manufacturing productivity as 100, in Korea, service sector productivity is 45%. In the OECD as a whole, it's 84%. You have countries like the UK where service productivity is higher than manufacturing. So if Korea wants to become as high income as the US or leading European countries, the service sector has to become the second driver of growth in the economy. And as I mentioned, the support for SMEs is very high. We can't just give them more money. What it means is the SMEs don't want to go up. If you're an SME and you're benefiting from these 1,300 programs, credit guarantees, why become a big company? Then you pay taxes and you lose all these benefits. Or they divide. You make a SME that's going to become too large, they divide it in two. So we have to make the policy more favorable to SMEs that want to grow. And we call it the Peter Pan syndrome. We don't want to go up. And so we have to change that whole mentality. So these are our long list of recommendations. We need to talk about regulatory reform. And the government is talking about it, but Park Geun-hye talked about regulatory reform for 5 years, and the results were, to put it diplomatically, were a bit disappointing. So really, if Korea wants to become an innovative economy with small SMEs that are driving innovation, they have to change the regulatory framework. So let me stop here and listen to Tara.
Thank you, Randall. Tara?
Wow. This is a fascinating report. I'm sure all of you have many questions, so I don't want to talk too long. About 10 minutes. I'll try to keep my comments to 10 minutes. And certainly, I loved reading this report. It's rich. It has color. It has granularity in terms of policy recommendations. Like the previous ones, I really enjoyed this report. And I should, on the outset, say that we agree with the recommendations that you have. Maybe I need to also clarify our fiscal policy recommendations so to see if there's any shades of differences there. Let me divide my comments into three. One, the overall, our view of the overall economy, and second, I will go through macro policies, and finally, third, the structural policies. Regarding the overall view of overall economy, of course, our role is to find weaknesses in the economy and, tell the authorities what they can do better and all that. But let's not forget, Korea's economy is strong. It's a dynamic economy. It's a big economy. It's a powerful economy. It's one of the largest in the world. 3% of growth is quite respectable for an advanced economy. It could be higher, of course, but still, 3%, it's not bad. We think there's still a gap. There's an output gap, so there is slack in the economy, certainly on the employment side, we see that. Some argue that on the product side too, you can see that. But overall, the economy is a strong economy. Importantly, this economy has so many very good buffers. When you look at the financial sector, the risks are well contained. When you look at their balance sheets, they're strong. They did go through this crisis 20 years ago, and they learned their lesson. The financial sector is sound. When you look at the fiscal position, their overall balance sheet is very, very strong. When you look at their reserves, $400 billion. It's very substantive. So this economy not only is strong, but it also has very strong buffers that can be used, very deep buffers that can be used in case of shocks. So in that sense, this is actually the perfect time to fix the roof, because you're strong. You know there are major problems that may be coming up, so this is the time to take the action. Risks, of course, the trade protectionism is a risk. We believe Korea can handle it. It's as I mentioned, the economy is strong. It has large buffers, and also the authorities are very, very competent. So, given that, how do we see Korea going forward? The major problem that we see is that the economy is lopsided. It is, just imagine you're on this giant plane. It's big, it's powerful, and you look at the left wing. Under that left wing, you have these giant jet engines that are driving this big plane. When you look at the wing, the right wing, you see many very small engines, and some of them are actually propellers. They're not even jet engines. So the plane is going, but if something happens to these large engines on the left, you're doomed. Unfortunately, there have been examples of that in a number of countries in Europe, especially Nordic countries, where technology-related firms, if they start going down, it's very sharp, very quick. So it's a risk, and I think your report highlights this kind of an angle, which is important. Diversification of the economy. As economies develop, diversification increases, and after a point, they start reducing their diversification and become more specialized. Korea has diversified quite a bit and started to specialize again for the last 20 years or so. But when we look at it, maybe Korea has diversified specialized too much. That compared to other countries, its economy should be more diversified. We're working on it actually for our next Article 4. Hopefully, we will be able to show you more on that. So that's the overall picture. Given this, what are the macroeconomic policies, monetary policy? We think Bank of Korea should maintain its accommodative stance. Why? There is no inflation. Inflation is lost. We're looking for inflation. It just doesn't show up. Again, June numbers again showed inflation is low. It's very important for Korea to make sure inflation goes up. That would also allow the rates to be raised later. And once rates are raised, that would also give them more room, monetary policy room. Currently, monetary policy rates are not too far from zero. There is space, but that space is not large. So what to do? Inflation needs to pick up so that rates can be raised, and not the other way around. Not the other way around. Rates should be raised, which will give them more buffer on the monetary policy side. When we were in Korea, we continuously heard this, well, but there are financial risks. Monetary policy should react to that. Our very strong view on that is that these kinds of financial risks are being handled properly by macroprudential policies. They're working. They may need to be tightened further, maybe in the coming 6 months or so, depending on how the developments are. But those financial risks are handled by another tool. So don't use your only policy rate to try to reach to different targets at the same time. Just focus on inflation and make sure that inflation goes back to its target rate of 2%. Of course, the fiscal policy, monetary policy combination is very important. In our view, fiscal policy is just too tight. And that's one of the reasons why monetary policy has to be accommodative. So if we see that fiscal policy is loosened, then that could actually create opportunities for monetary policy to normalize earlier. So that brings me to the fiscal. The fiscal policy. It's a very complex picture. We all know Korea is going to get hit by this demographic shock. What does that mean for fiscal stance, fiscal variables? When we look forward, in about 10 years or so, they will need to start raising taxes. Expenditure will start going up in such a way that after 10 years, for another 20 years or maybe 30 years, expenditures will continue to go up. Now, the government's size is about 20% of GDP. In about 30 to 40 years, the size of the government will have to be around 30% of GDP on the expenditure side, and you have to. There's no other option. They have to raise their revenues to match that. If they don't, then what they do today or tomorrow doesn't really matter. At the end, they will have a debt accumulation problem that we see in some other countries. So, in the long run, there is no question that Korea has to raise taxes. There is no question that Korea has to raise revenues. But the complex story there is that today, whether you take away fiscal stimulus from the economy or not, is not going to help you tomorrow. In 20 years, 10 years, 20 years, 30 years, that's not going to be helpful. Today, when we look at the way we look at Korea's government behaviors, that we put together the pension fund and also the central government. And the reason is that when there is when the pension fund decumulates all these assets, it's the government that needs to step in. So they're fundamentally integrated. And when you look at the consolidated government continues to take away resources from the economy. We're not saying have a deficit. We're saying don't take away resources today from the economy, because there are many areas where you do need resources. And there are two key areas where we think it's very important to spend more money. One is on the vulnerable in the society. And for that, I was so happy to read. They even got their headlines in the report. The headline was "Addressing the Problems of Older Workers and the Elderly." It's like it's really an issue. In our view, Korea can spend more money on protecting and supporting their elderly. I think you have a different approach to it, but at least this is a key issue that we think fiscal policy can have an impact. And the second very, very important point is growth-enhancing policies. Certainly, Randall, his report covers many areas where some funds, especially for transition adjustment to a new norm is very difficult. There are transition costs. And Korea has money to make sure that these transitions happen in a way that also accommodate those that are getting negatively affected by these transitions. So that's fiscal. On monetary policy, macroprudential measures, they're working. They're handling the household debt problem. May have to be tightened further. We can talk about that if there's time. I'm running out of time already. Minimum wage. We need to be really careful. The impact of the increase, the 16.4% increase in minimum wage in 2018 is very difficult to calculate. It takes time. There are so many different things taking place in Korea in terms of its demographic behavior and in terms of the way employment is switching, moving from one sector to another. And the numbers are so large that it is difficult to really, even if you have a very large magnifying glass, it's difficult to see the exact impact of the minimum wage. But overall, there does seem to be a negative impact. Literature says, and OECD reports, and you also mentioned that as long as the minimum wage is not too high, these negative effects will be temporary. And that's what we're hoping for. In Korea, before 2018, minimum wage was lower than average, OECD average. Now it is around average, a bit above average, depending on whether you look at the minimum wage or median compared to median wage or average wage. But once you pass a certain critical point, if given the distribution of wages, so let me try to imagine according to you. So if this is the mean, if this is the minimum, so as you push minimum closer to the mean, you're squeezing the distribution so much that you start to hurt the economy in a fundamental way. Did we see an example of this? Yes, we did. Where? In France. Our managing director actually talked about this in Korea. So we have to be very careful pushing up the minimum wage too fast. And also, as you have mentioned very rightly, there are all sorts of measures that are implemented to compensate for this. But two negatives don't make a positive. This is not a multiplication. This is additive. It's two negatives. So we believe it's very, very important not to protect jobs, but protect the worker. So if a worker gets fired from a job, fine. Help that worker find another job. Train that worker. Maybe he wants to get another job. Maybe some kind of internship somewhere else. You can subsidize that. So there are very good examples of active labor market policies that work and don't work, especially in Nordic countries. One of my colleagues, actually, Niels Jakob Hansen, he's sitting there and he has a lot of experience on that. He's from Denmark. I don't think he has experienced this personally, but it's one of his theses. So that's that. Income-led growth, we can talk about that, but I'm running out of time. So let me very quickly switch to structural policies. Two things. One, labor markets. I can't agree with you more on this. Female labor market participation is so critical for Korea. This is one of the main tools that the government has to use to go against the impact of demographic changes. So everything that you say, we fully support and more. You also say expanding the social safety net would facilitate increased labor market flexibility. Agree. We looked at the markets quite carefully in the last Article 4, and we strongly recommended flexicurity, but flexicurity in the Korean way, with Korean characteristics. Flexicurity has three characteristics. One, flexibility of the markets. Two, the security of the workers. And three, active labor market policies. If you don't have proper active labor market policies, it just won't work. But we think Korea can do that. And I think Korea's culture can allow, or would allow for that to work. And finally, on product markets, learned a lot reading. I was thinking, you have so many really great things. For example, one place you say for large firms, you say reform should not aim at destroying the groups, but instead to create a framework in which competitive firms grow, regardless of whether they belong to a business group, and shareholders' rights are respected. And this is so good. And on SMEs, for example, you say the large-scale support for SMEs should shift from supporting the survival of firms to raising productivity. I mean, these are really very critical principles. I would really strongly recommend to the government, look, take these two principles, run all your policies through that. Do they satisfy this criteria? Yes? Good. No? Get rid of it. Because these are really fundamental principles. And finally, my last point, education. We do praise education, the education system in Korea, especially with PISA results. But I'm wondering, I would like to put a question mark for the role of the universities. Are the universities serving the society and the economy properly? What are the two key service objectives of universities? One is to raise young minds in such a way that when they come out of the university or vocational schools, they are ready to participate in economic activity. Are they doing that right? And my sense is that no. Once they enter the university, they get into a network and they feel comfortable in that network, and that's the end of it. And second, probably even more importantly, are the universities helping the economy to be more innovative? We know these giant engines, these large companies have their own research and development. But for smaller companies, how are they going to do research? Universities can have very fundamental impact in helping smaller firms be much more innovative. Do we have examples of this? Yes, we do. Where? Switzerland. And years ago, paid a lot of, the results were fantastic. It also saved labor, which is already an issue for SMEs. They are lacking labor anyway. So it could be a very fruitful area to look at, the role of universities. Maybe next round, maybe it could be one of the chapters. Thank you.
Well, thank you to you both. We'd like to open the floor now to questions. This is being live streamed, so please do wait for the mics to come, and if you could give your name and affiliation. We'll start with Stanley.
Stanley Kober. I'll just focus on something on page 3 of this report. And it says household debt is backed by a rise in assets, but specifically housing. I don't know why this is so reassuring. If the value of the housing is going up, but the price-earnings ratio of equities is not. That seems to me to be a bubble in the housing markets, like what we saw about 10 years ago. It's not even an increase in all asset prices. Moreover, how do you monetize the value of that housing to pay off the debt? Unless you sell off the houses, I don't understand the importance of the comparison. Why compare the debt to the value of the housing? You should be comparing the debt to something that generates income, and the housing that people live in doesn't generate income. So, could you explain why I should find that statement reassuring?
Mike over here is next.
Michael Kim, thank you for your presentation, Dr. Randall. A couple of things I'm wondering. First, in terms of services, I remember when KI hosted a panel on Kita's recent study, and likewise I asked there about services. So when you refer to services, are you talking about specifically those services geared for international business, like financial services, legal services, or is it broader than that? And the other thing I'm wondering, what does investment, what role does investment play? And I'm talking both in terms of investment into South Korea. And of course, you've talked about some of the challenges like shareholder rights, lack of predictability, labor costs. I'm also wondering about outward investments because I would say Hyundai, Samsung, LG, they do have a lot of outside investments throughout Asia, the Western Hemisphere, Europe, Middle East. So does any of that outbound investment, any of the revenues from that flow back into the South Korean economy? Thank you.
Okay, let's take one more question with Danny, and then we'll turn it to you.
Hi, I'm Danny Leipziger. Thanks, Randall. I think your diagnosis was spot on. I think perhaps the government may have been misled by the hours of negotiation with the OECD to think that they're actually on the right track. I think they inherited a bad situation, the housing market, Choinomics, trying to produce growth by stimulating the housing market. Stupid. There's been very little competition policy, really. There's been very little action on gender, so women's labor force participation is pathetically low, and it would be a way to raise potential growth rates, actually. It's one of the only ways that could happen. Current mistakes, minimum wage, I think the IMF was too kind. I think you have to look at the elasticity of demand for labor across different segments of society. And I think what's happened to the elderly is they basically get fired. So on average, maybe it'll have some, impact over time, but it's got a distributional consequence, which is not positive. And I don't know why neither the OECD nor the IMF is proposing something like negative income tax or something other than going through the wage market, which seems to me to be not the smartest. The idea that there's a new ministry of SMEs and startups worries me, because every new ministry I've ever seen that's targeted like that, like Ministry of New Economy, Ministry of New Industry, they all fail. And it needs to be run out of Ministry of Finance and Blue House. But my major question for the OECD is, so you have a draft, you discuss it for 3 days, you water it down, and it comes out sounding a lot better. What's the real advice that the OECD should be giving to the government? And you said you spoke with 25 people. Everyone has their own little area that they need to cover to make sure that the OECD report says something anodyne or positive. But, I mean, I've worked on Korea for many years, and I really think that the administration has laudable goals, but they have a totally screwed up approach to try to get there in terms of inclusive growth. And so who's going to be telling them? They're not members of the World Bank anymore in terms of receiving advice. The IMF, you worry about different things. So where do they get the proper advice, which is that the combination of policies they need to pursue are really, A, interwoven, regulation, SMEs, Chaebol, labor, et cetera, and B, they're not easy to do. And so I worry that the OECD report will be too positive.
So on that really easy question,
I think the way it's read in Korea, all the headlines are OECD attacks minimum wage policy, OECD attacks government SME policy. So the Koreans in their press take it as a very strong piece of a document that really challenges the government. And we talk to them in the mission, and then they see our rough draft. They know very much our ideas. In any country, for political reasons, they don't want it to be too strong, so they try to soften it. Some areas they want it stronger because they want us to be the bad guys saying, OECD says we have to do something we don't want to do. And they say, well, they said it. So I think Korea is like all our, the U.S. doesn't care, to be honest. The U.S. has everyone talking about them. They don't take our report very seriously, but Korea takes it very seriously, and every ministry wants a little advertisement for what they're doing. So they're doing this program that gives money or does something, and so they care very much about it, which in a way is flattering because they argue so much about it. The other countries are the weight. So if we go too far, they'll say, why are you agreeing with them on this? So we have this counterbalance. And so I think when I look at the headlines, I think, well, they really picked up every criticism they could in the survey and made that the front page news. On this new ministry, I guess the one advantage is if you have 1,300 programs and 20 ministries, if you can consolidate them down and just have 50 programs in this one ministry, at least there's some reduction in duplication. When I talked to the ministry last July, they were very defensive. What we're doing is what we have to do. We're not going to change. When I talked to them in April, or June, when we released it, they said, well, we realize it's not working, and we are going to try to change. So hopefully we planted some ideas that this new ministry, now that they can control this, that they will try to move in that direction. Negative income tax, what we call it earned income tax credit, we've always pushed that very strongly, both Japan and Korea. Japan doesn't have it. Korea has it, but it's quite limited. You basically have to have children, be married, so it's a very small benefit for a very small group of the population. In a country with wide wage discrepancies because of dualism, I think the earned income tax credit is a key to helping the working poor. So we always push on that as a way to try to reduce reduction of poverty. More generally, we do favor much more social spending. If you look at the composition of government spending, it's weighted towards economic activity, which is partly infrastructure, but partly subsidies and various programs to help exporters. So 16% of their government spending is economic activity, and only 20% is social spending. The OECD area, 9% is economic, and 32% is social. So we argue for the first step, before you raise taxes, is to rebalance the spending in the direction of social spending. So we favor more social spending. But my problem is, why make it people? Why hire 815,000 people? Maybe it's better to give more subsidies, transfers to older people. If you hire these people, they are a big burden that will be with you for 50 years. So we talk about more flexibility. We have to give more money to older people now. It's not a problem that can wait. You have to increase those transfers now, concentrate them, and increase them. And so the government setting these targets for employment is partly to help the young people. But for me, that's a problem. So we want more social spending, but we want it to be smart and focused on the key needs. The minimum wage, if 10,000 Korean won in Myeongdong would be fine, probably. I mean, Myeongdong in central Seoul, many firms could support 10,000 Korean won. They go to Jeollanam-do or someplace, you can't support that kind of minimum wage. So if you had a regionally different minimum wage, this wouldn't be such a dramatic thing. But 10,000 Korean won nationwide is really problematic for the country. So we talked about that as an alternative, but it hasn't gotten very far. We talked about that as well. But in terms of services, it's the whole sector. Part of it's business services, the legal, accounting, and part of it is retail, wholesale, the social services, which tend to be very regulated. So we think the service sector as a whole needs to be improved. The government will say, well, we're trying to develop an anime industry in Jeju-do. We're trying to develop medical tourism. But for me, it's not industrial policy for specific services. It's trying to deregulate the service sector. And to be honest, SMEs are social policy. They are kept alive to support the people who don't work for the Chaebol manufacturing. So we need to move away from it. And as you say, our slogan is protect people, not jobs. And that is a fundamental aspect that we try to get across. In terms of the housing market, I agree that the last government, since they didn't want to do reform, they said, let's just jack up the housing market. I mean, we saw that earlier in the 1990s. We saw it in this time when the housing market going 25% a year, residential investment. And so for me, we put that phrase in, it's backed by housing, to say it's not credit card debt or something else. But I agree with you. It's not too reassuring. And the government target is to slow the growth of household debt to 8%. That implies with 5% GDP growth, it keeps on rising. So I think we might need to be a bit more ambitious. You talked about more adjustment to the macroprudential. We have to be, I think, more ambitious on household debt and not say, let's get slower growth of household debt. We need to start having a soft landing and reducing it as a share of household income. So it is a big concern for me. And I agree it's not a policy that should be dealt with by the policy rate by the Bank of Korea, because that is a blunt instrument that would hurt the whole economy.
Okay, we'll take another round of questions. We'll start with Mike over here.
Mike Massetti, PBS Online News Hour. I don't know if this is actually in your bailiwick, but going back to housing prices, how do you see the connection? Because to me, as not an economist, you look at housing prices, not just in Korea, but in Singapore and other places in Asia. You know, it costs a young couple $1 million to buy a one-bedroom apartment. That's not much incentive to have kids, maybe one at most, but certainly not 2, 3, or 4.
The gentleman over here.
Steve Winters, independent consultant. A speaker from Korea here at KEI just recently suggested that this small and medium group in South Korea was falling behind. Actually, he made a comparison to Japan in terms of so-called Industry 4.0, digitization, informatization, whatever. I'm surprised, I was sort of putting together in your talk, maybe I could guess what the reasons for that would be, but it would seem that certainly in terms of recommendations, if they're a big competitor, for instance, in semiconductors, it's liable to be China in 7 or 10 years, and so forth and so on. And China is totally bought into this 4.0, so on, also Japan. That should be possibly a high priority to be addressed by the government if they aren't already.
The lady right here.
Hi, Rachel Lingus with U.S. Treasury. I wanted to address just a couple areas of potential risks, and I believe it was Tarhan touched a little bit on inflation and bringing up inflation to essentially create more wiggle room for policymakers, so that adjusting the rate actually has an impact. I wondered if you could talk about if there's any risk. Well, first of all, I'd be curious of what exact policy measures that you've advised the authorities on how to bring inflation up, if any, and are there any risks of divergence in policy rates between the Bank of Korea and the U.S. Fed and now Bank of Japan? You see monetary policy divergence that might create higher risks, cause investors to pull assets out. I've seen a little bit of commentary on that among private economists, and I just wondered your views on that. Also, I wanted to address semiconductors. So there's also a little bit of market research indicating that we might get kind of the peak of the semiconductor cycle and that export data is in fact weakening. I wondered, given that that Dr. Jones, I think you mentioned that this is such an important part of the Korean economy, I wondered if you could talk briefly about the risks there. Thank you.
Right, and since we're short on time, the gentleman back here, we'll give him the last question before I turn it back to you two to answer those and any last thoughts you have.
I have a short question. Thank you. I'm John from Radio Free Asia. You mentioned about the North Korea, the economy. So due to the sanction, how the serious now in economy in the North Korea now, if we have, can you tell me more detail? Mm-hmm. And now we can see the development of the relationship between North and South. So how you expect the North Korea risk in South Korea economy now? Thanks.
Thank you.
On housing prices, you see already the city of Seoul is losing people because it is so expensive. So people are moving out to these satellite cities. And the President Moon has a program of trying to provide low rent housing to families, young families in Seoul. The problem in the Korean housing market is the chunsejeep. And there's not so much rental housing, but you have to come up with the down payment to buy the house, and then you get back when you leave. So the whole system isn't geared for young people moving into housing. So that is part of the birth rate problem. The other problem is Hagwon. If you've been to Korea, you know about Hagwon, which is the after-school private learning institutions. In theory, they have to close at 10 o'clock in Seoul, but they turn off the lights at 10 and they go back to work till early morning. And that costs so much money. Some families spend a quarter of income in these institutes so that they can get their kids into the Sky University, Seoul Yonsei Korea University. And so if they want to have 3 kids, they think, well, do we just pick one and send them to Hagwon and the other 2 could just flounder? So they limit families partly because of that as well. The cost of education, private education. Universities are largely private and they don't add much value. In Korea, the kids work so hard to get to university, the Hagwon, the school. University is, I don't know if I should say it publicly, but it's kind of a 4-year break before they go into a job where they work really hard. And so they have a situation where universities are underutilized. It's just, it's where you meet people and it shows your level, your ranking. If you get into a Sky University, you're smart and you go to the Ministry of Finance or Samsung. And so I think the university sector is underutilized also for R&D. They're not part of the Chaebol R&D sector. Digitalization, that's the real key. And Japan is probably ahead. One of the problems is that digitalization allows you to save labor costs. But if you can't fire workers, you introduce this digitalization, you don't get the payoff in a sense. So labor flexibility is one aspect that they need to have in Korea. If you ask SME owners, why don't you do it? Sometimes they say, I don't see any need. And that implies not enough competition. There should be a situation where if you don't do it, you don't survive. And then the next question is, why don't you do it? If you need to, it's because they can't find the human capital. The people who work for them tend to be older and less skilled, and they don't have the money to invest in the system to start with. And so basically in today's economy with cloud and all these other things that are basically free, SMEs have access to all this technology, but it's really the problem of human capital and the competition to make them move into it and then adjust the labor force based on the gains. So there's great scope for progress that they need to take advantage of. On inflation, for me, I mean, it's low, it's 1.5, but you look at the service sector, because of the minimum wage partly, service sector inflation I think is 2.6%. So I can see that if the minimum wage actually gets enforced, I can see that driving inflation. When we make a projection, it's very hard to know, will they really enforce this? How many companies will ignore it and not be forced to pay the full minimum wage? So it's very hard to predict what the pass-through is of the minimum wage. But if service sector inflation is up to 2.6%, that suggests that the higher wages are having some impact. And if we talk about 10%, 11% next year, I can see that potentially as a source of higher inflation in Korea. On the policy rates divergence, people follow it mechanically. It should be 1.5 or something. And so I don't think we need a mechanical approach, but it's something that will influence the exchange rate. And to be honest, the exchange rate issue, we don't believe in targeting exchange rates. We believe in floating exchange rates. But as part of the balancing mechanism is having a floating exchange rate. And so maybe that would be another way of generating inflation. And we don't want to be too explicit here, but it's one of the mechanisms that works. In terms of semiconductors, I think it's peaked. Year-on-year growth I think it was up to 30%. I think it's coming down gradually. So for Korea, cars aren't doing that well. Semiconductors were really driving the economy. If you look at capacity utilization, it was like 72%. The historical average is 80. So you had a kind of another lopsided thing. It's not just the one wing, but part of the one wing was not working. It's just the semiconductor and ICT part was really working. So Korea is even more at risk because it's not a broad-based export recovery. It's really focused on that one area. North Korea, as you mentioned, it's these sanctions, in a sense, prohibit Kaesong. Kaesong can't restart under the UN sanctions. So we have to resolve these issues so that the South can start investing in the North. For me, the biggest opportunities are the infrastructure. Can you imagine the railroad going along the East Coast into Russia? How fast you can get Korean cars into Europe? Think about all the possibilities if we can resolve these issues and reduce sanctions. So you look at the wage gap, and Kaesong was a great benefit to SMEs. China was expensive. Vietnam's getting expensive. But in North Korea and Kaesong, you had Korean-speaking workers who were being paid $70 a month, who were very diligent. So for SMEs in Korea who have a labor shortage, 80% of South Korean SMEs say they can't find enough labor. So they bring in 500,000 trainees, but that's not enough. They work in manufacturing. So North Korea is part of the solution. So hopefully, as an economist, I'm not the expert in this area, but we'd like to have this cooperation that would be beneficial to both sides.
Any last thoughts? Or? All right. Well, if you'll join me in thanking both Randall and Tehran, this has been a really great discussion. Both of you, thank you very much.